Hey everybody, welcome back to my YouTube channel. It's Dustin Drum with Guide Real Estate and Lockhart Bailey Group. Today I have a very special guest with me, Jill McCain, my favorite loan officer from Expert Home Lending. She's the one I pretty much tell everybody to go to and talk to for any of their home lending needs, any questions they might have, whether they're ready or not. Um, she is the one she's a magic person, a magician, if you will, on the loan side of things. And lending is the most important, crucial step. And I've said it a million times before that before you get started in the process of even considering to buy a house, this is the first thing you should kind of look into. So before I get started with our conversation, Jill, please introduce yourself. Tell us a little bit about you, where you're from, how long you've been in the industry, kind of like your Pareto, if you will, of how you do business and all that good stuff.
So my name is Jill McCain. I am with Xpert Home Lending. I am originally from Mississippi. I moved to California in 2010. I used to be a branch manager for Chase Bank. That's what brought me to California. And I've been in the finance industry since 2008. And then I started in mortgage in 2013. I was on the direct lending side for a while, and then I went to the broker side in 2018. And I've been with Xpert Home Lending now for about 5 years.
So you started when you were 12,
Of
then basically is what
course. Of
you're okay.
course. I wish. Yes.
That would make you, yeah, that I think that would violate some child labor laws of some sort. Um, so the biggest, I guess, challenge that we real estate professionals have, especially in today's economy and today's market and conditions that we see and outside noise and all of the things that we hear about, like buyers are very hesitant to even kind of look into buying a home because they're afraid that A, they can't do it, or they're further away from it than they think, or whatever the case may be. How do you what do you say to somebody that is like maybe has that mindset or has that idea that they're too far away from it, or it seems out of reach, or how do you kind of like not, I don't want to say overcome that obstacle or overcome that objection necessarily, but what is it that you would say to somebody that was like just kind of on the edge or just doesn't even want to even look into it or
Yeah.
maybe yeah.
I think it starts with education is key because so many people get the facts, as some people say, off the internet. They just Google it and that's what they think. Okay, I asked Google, this is what Google says, this has to be how it is. And I think just educating people because a lot of people think they're very far off, or some people think they are closer than they are. So you have to start somewhere. So the first place to start is to talk to a real estate agent and a lender, and that way you can look at your whole situation. A lot of things that people I actually had this conversation yesterday with someone who originally thought they were 12 to 14 months out because they have a lot of debt in their mind. And they were looking at the overall balances that they have of debt. Whereas on the loan side, we don't look at the total balance on credit cards and things like that. We primarily look at the minimum monthly payment. So, for instance, this client was thinking, oh, I'm a year out because I need to pay off all this credit card debt and things like that. When in reality, once we sat down and looked at the game plan, she's actually about 3 to 4 months out instead of being a year out. But if she had just gone off what she looked at online, then she would have still thought she was a year out. So she was really glad to know that she's closer than what she thought she was. Um, but I do think starting talking to someone, whether you think you're a year out, or even if in your mind you're 2 years out, start having that conversation and learning what all goes into your debt to income, where your credit score is, what you need to do to pull it up if that's what you need,
Mhm.
roundabout how much money you need to save if down payment assistance works, income limits, things like that. But at least start having that initial conversation. That way you know exactly how the loan side works. And also, a lot of people think, oh, well, rates are too high. Now's not a good time. I
Mhm.
always say, any time to buy real estate is a good time. If you're going to wait for rates to come down, then the home prices are going to start going up and it's going to
Mhm.
be a seesaw all the time. So I always say start having that conversation with a real estate agent as well to understand how home values work and the lender to see how the lending side works. But this is
Mhm.
where having a dedicated team does come into play because you want people on your side that aren't there just to put you in a house, just to get a sale, because it all starts with education. You don't know
Mhm.
what you don't know.
Right.
And I think being in this industry day in and day out, we know how it works. But for someone that's not, you have to start at the basics, explain the terminology to them. What are the steps? Because if you Google it, or now everybody's putting everything into Chat GPT, they're just going off what the internet says. But in reality, having that conversation, looking at your overall picture to see where you are, what your goals are, and understanding that to see how to get there.
Mhm. What are so you talked about internet stuff and whatever. What do you think is like the biggest misunderstanding or myth that you're hearing like people come to you with like saying, "Oh, this is what the internet's." Is it mostly about interest rates, do you think, or is it what is it
Um,
that
it depends on the person. A lot of times, I would say the majority of people that I talk to just think, oh, I can't afford it. Whether that's a combination of the rates, their debt to income, their income, because a lot of people don't understand how underwriters view income as well. And then on the flip side of that, some people think, oh, my income is this, I can afford this, when in reality we can't use all of the income that they technically make,
Mhm.
um, depending on the amount of hours that they work, because income is calculated different for a full-time employee, and
Mhm.
full-time meaning 40 hours or more regular
Mhm.
hours. Some people work 32 to 34 hours and they say, oh, this is full-time for my employer, whereas that may be the case, but it's not when you calculate it for loans. So that goes back to having that initial conversation. That way
Mhm.
you can see what your qualifying income is that we can use, because sometimes it's less than what you think, sometimes it's more. It just, goes back to the education and you have to start somewhere. So
Mhm.
before I pull credit on someone, I will ask them to go ahead and send me their pay stubs. And let's just dial in the income first before we start pulling credit and all of this other stuff, because we need to
Mhm.
see what we're starting with. So let's
Mhm.
start with the income and build a plan and see what income we can use, because that's going to be a big factor.
Mhm. Yeah, I think everyone's biggest fear is, like you said, they can't afford it, so why would they even try? Or they understand or misunderstand um, what what the reality is of the situation. And I always tell people, like you just said, you don't know what you don't know, and we do this all the time, every day. Like this is what we look at all the time. And I also, it's hard because like we're not trying to convince people to buy houses, but we're definitely trying to show them that it's possible or what's possible and try to, you know, um, encourage them to do something sooner than later. Because the longer somebody waits, and I can speak to this on the real estate side of things, the longer people wait, the more expensive things are getting. And so, whether that means interest rates are up or down, it doesn't matter. I mean, whatever that means, we've been in a seller's market for 15 years plus here in this area of Sacramento. Um, and we don't see that changing anytime soon. Um, you know, there's always I still get this too, like, well, we're waiting for the next crash to happen. And I'm like, well, I don't really see that happening.
Yeah.
But where are you here? You're like, why do you think there's going to be another crash? And so it's one of those things that I have to like overcome that
Yeah.
in a conversation a lot and explain how the history of, you know, why that happened. I wasn't even in residential real estate in 2008 when all of that went down, but I know now what the circumstances were of that and how it's different today than it was then, and different regulations and different ways that we get loans and things like that. Um,
Exactly. Because back then, too, like a lot of the loans that were out there were stated income loans. You didn't have to provide pay stubs. Now, now we go more in depth with that. We do verifications of employment, whether it's written and verbal or if it's just verbal. Like there are many checks and balances in place now. And even one of the biggest objections, which we've heard over the past couple of years, is, oh, rates are so high, rates are so high. But if you go back and you ask like your parents or grandparents what their rates were, it's not high, but I think a lot of people also have it in their mind, oh, well, it's not a 2.5 or it's not a 3% rate. Those were not normal rates. And
Right.
I think a lot of people have in their mind, oh, that could happen again. That will not happen again, more than likely. And those weren't normal rates. Where rates are
Hmm.
now is more of a normal market.
Hmm.
Um, and I think some people that are waiting are like, oh, well, home prices will go down. We'll have a market crash or rates will get back to the threes. Well, that probably won't happen, but just keep in mind when interest rates go down, home prices go up. So you're
Hmm.
still, I mean, you're paying for it one way or the other.
Yeah.
But I think a lot of people now are starting to realize, okay, these rates are normal rates and they're not as bad as they could be.
Hmm.
So,
What? Yeah, totally. And I agree. I mean, that is a conversation I kind of have anytime this comes up. That's the conversation that comes up. The newest wrinkle that I'm having to discuss, and probably I know less about, is like today's economy with like whether you whichever way you lean, today's presidential administration has got some things going on economically that are may be affecting the cost of things and tariffs and things like that. And it comes back to affordability and what you're comfortable with and all that. But like what I mean, and I don't know if you know the answer to this, and this is kind of off the cuff. So, I mean, what I don't know. Do we foresee like I don't know a change in how lending is done based on tariffs and things like that, or do we not? Do you think it'll
I
affect us
don't
at all?
I don't think we will see it on the lending side. Because the regulations are pretty, I mean, they're pretty tight anyway now.
Mhm.
Like we have more checks and balances with things. So I don't think that would impact it a whole lot. I mean, according to what people pay outside of mortgages, yes, but also I tell people this as well. Like if you just randomly walked down the road and you saw three people and you asked three people, do you know what the rate is on your auto loan right now? You might get
Yeah.
lucky and one of those three might be able to tell you, but more than likely, the average person is not going to be able to tell you what the rate is on their auto loan, but they can
Hmm.
tell you the payment. And so they felt comfortable with that payment. That is why they said yes to that car in those terms because they felt comfortable with the payment. So I try
Hmm.
to tell people it's the same way with mortgages. Concentrate on what you feel comfortable paying a month and then center your purchase price and everything around that. Because a
Hmm.
lot of people come into it, oh, what is the rate? What is the rate? What is the rate? Well, the rate is the rate is what the rate is. So as long as you're comfortable with the payment, that's all that matters. So it doesn't really matter per se what the rate is. Granted, that does
Hmm.
dictate what your payment is, but find a payment that you're comfortable with and then build everything around that because you don't
Hmm.
want to get into a home that is X amount of dollars, have a little bit lower rate, but you're still house poor because you're working every month just to make that payment.
Hmm. Yeah.
So I always say anytime's a good time to buy as long as you feel comfortable with that payment. But also keep in mind, this goes back to what I said earlier about people going online and searching on the internet, oh, what is the rate today? So when you go online and you search what is the rate today, it's the same thing as going online and saying what are gas prices today. It is a
Hmm.
national average. So it's taking into account all across the US. So it's the same thing when you go online and search for rates. You're going to get the average rate. Well, rates have a lot that go into them depending on where you live, purchase price, down payment, credit score, things like that.
Hmm.
So that's why I say don't fixate on the rate because if you go online and you Google what is the rate today, and let's just say, for example, this is probably not right, but let's just say, for example, it gives 6.25. Well, then in your mind, you're setting yourself up because you're like, okay, the rate is 6.25. So then when you start searching or doing your own numbers, you're basing it off of that. But that's a
Hmm.
national average. It's not, rates are kind of structured and tiered to you individually. So I always say, and this also goes back to what we said earlier, start having that initial conversation to get educated on how real estate works, how home values work, where you think they're going with a real estate professional. Don't just trust the news and online, because having a person, like a real person, educate you and tell you the ins and outs and explain it to you has a lot more value than just
Hmm.
searching it online.
It's funny because it's, as you're speaking, I was thinking like when you ask somebody like let's say they just bought a house or they whatever, the first thing that they'll tell you is, yeah, I got a really good interest rate. You're like, and they think they won because of the interest rate that they got.
Yeah,
Like, that's like how they measure success. And like, okay, but more importantly, like you were just saying, is your monthly payment like exactly where you wanted it to be, and is it comfortable, are you comfortable with that? Because that's really, like you said, we don't pay our bills with interest rates. We pay our
exactly.
bills with real money that is in the form of a monthly payment or whatever. But um
And you also have to see what's important to each individual person. Is it
mhm,
having a lower payment? Is it coming in with less money at closing? Um, is it paying the right value for a home? That's what
mhm,
goes back as well as educating yourself and whoever you're talking with to see what is important to you. Where are you now? What are your
mhm,
goals? And what can we do to get you there to set
mhm.
you up so you're not struggling financially when you go into a home.
Exactly. Speaking of that, are there any new things that are like maybe the new buyers need to start thinking about, or haven't had to consider thinking about, like if they're renting right now, things that are kind of factored into a monthly payment that they might not have currently be thinking about. So like
Yeah.
I think you know what I'm talking about. So like I'll let you like expand on that. But what are some, I guess some, I don't want to call them hidden costs, but what are some unexpected things that maybe buyers have to now consider that they wouldn't have had to consider, I don't know, a year ago maybe?
So one thing that we are running into a lot right now is homeowners insurance.
Hmm.
Um, Homeowners insurance is kind of all over the place right now, depending on the area that you purchase in, the age of the home, um, things with the home. If the home is of a certain age, like how old is the roof, things like that can impact your homeowner's insurance. But more importantly, the area that you purchase in and whether or not you have HOAs, things like that. There are several things that go into it, but I think it goes back to if you are renting right now and you're wanting to purchase in the future, whether your lease is up tomorrow or your lease is up a year from now, go ahead and start having those conversations
Hmm.
so you know, okay, my lease is up April of next year. What
Hmm.
can I do now to start preparing for that so I'm fully prepared? But even closing costs. So a lot of people that rent that are first time home buyers will say, oh, down payment assistance. Down payment assistance is a great tool. It is a great program, but it's not always the best program. So
Hmm.
that's why I say have those conversations early. That way the loan officer can go in and they can show you, okay, if you use down payment assistance, this is all that it entails. This is what the payments look like. Because most of the time those payments are a little bit higher because the interest rate is higher. And I always tell people no money is free money. So you do eventually have to pay those back, whether you refinance or purchase, but the closing cost. You have to pay like the lender's fees, title fees, things like that. So I like to go over all that up front so everyone knows for sure, okay, whether we're buying a year from now or when we're buying, exactly what costs they have to come in with. Because I have so many clients that will come to me that have been turned down by other lenders and or either they're getting a second opinion.
Hmm.
I'll bring up closing costs and they'll have no idea what I'm talking about because the other loan officer or lender, whoever, did not go over that with them. They just went over
Hmm.
the down payment.
Hmm.
So a rule of thumb is we always say closing costs are about 2 to 3% of the purchase price. So I do like to go over that up front. That way there are no surprises
Hmm.
because no one likes surprises, especially when it comes to money.
No, nobody likes surprises I mean, in a real estate transaction, the last thing you want is surprises. You want to have everything kind of laid out and then follow the plan, right? So
Yeah.
it is key, especially we're trying to offer a top tier experience with a home, and it's like, we spend so much time telling people not to worry so much and like to, whatever, and then things pop up in the middle of it and you're like, I was going to ask you, oh, the other question. So the opposite of that is someone comes to you that says, yeah, I'm pre-approved with Rocket Mortgage or whatever. I've already got this down. And I also will get a second opinion at least, right? Like get another, there might be some things that you don't know that other mortgage company might not be telling you, like your big bank or whatever. Or maybe they're telling you that you've got pre-approved for or that you're pre-qualified for a 5.99% rate or something like that, but there's something in there that doesn't smell right and you don't know what that is, because at the end of the day, like you said, there's no such thing as free. There
There
you
you
go.
are. Okay, it
Oh my
froze.
goodness.
Sorry.
Oh my gosh. I was like, that was weird.
The last thing I
Uh,
heard was no free money. That was the last thing
there's
I
no
heard.
free money, right? And then hopefully uh um how would you tell people, or like just getting people to understand that like getting a second opinion is
Yeah.
important, that Rocket Mortgage or Chase or B of A or Wells Fargo or whatever might not have the best product in mind for that person? Like how do you, like, as
So
a
I always
mortgage, so
tell
you're a mortgage,
people
so go ahead.
it's always important to get two or three opinions
Hmm.
because there are several different types of lenders that the average person doesn't know. Like we know because we're in this business and we know the ins and outs, but I always tell people it never hurts to get two or three opinions. Most of the time, so you have your banks and then you have direct lenders, then you have brokers. Um, all three are great platforms. When you go to your bank, most of the time, even if you walk in to a bank, and let's just say you bank at Bank of America, you walk in, they have their board when you first walk in, it has today's rate is. Well, let's just say, for instance, it says 6.99. Well, you keep on walking to the teller or whatever, and in your mind, you just say, oh, Bank of America's rate today is 6.99, for instance. But if you
Hmm.
walk up to that piece of paper, you look at the very bottom in fine print, you'll probably need a magnifying glass. It will tell you, and it's like this with all lenders, not just Bank of America, but even online, if you see something online, at the very bottom, it has to tell you how they came to that rate. So 9 out of 10 times it's a 740 credit score. It's 20% down. It's a conventional loan. And also it'll tell you what states that is available in.
Hmm.
So for instance, I had a client about 2 months ago say, oh, my bank's offering me X rate. So I said, okay, let's look at it together. So we went in and looked. It was a $800,000 purchase with 20% down, 740 credit score, but only offered in the state of Texas. Well, they live in California
Hmm.
and their purchase price was not 800. So they priced that out based on the scenario that was in the very fine print.
Yeah.
And
Hmm.
they thought that would be their rate. Their
Hmm.
their credit score was not 740. Their credit score was 720. So what they thought they saw online as the rate and what they were offered was not what it really was. And
Yeah.
also, when you get second opinions, you can take a look. So when you are doing your pre-approval, most of the time you'll get a loan estimate. So the main thing you want to look at is the first section, which is section A, and that will be your lender charges. So what I've noticed here for people that come to me for second opinion is they're being charged points for the rate and they're not aware that's what they're being charged for. Like if
Hmm.
they're being quoted a rate on the loan estimate, they will see points charged, but they don't understand what that means because they're just focused on the rate.
Hmm.
Well, you can get any rate you want. How much do you want to pay for it? So for instance, you may be getting a rate of 5.99, but your closing costs are high because you're paying for it. And that'll
Hmm.
show in section A of the loan estimate. So every lender is different, every bank is different, every lender has different fees, and the rate sheet is different for everyone. So when someone is
Hmm.
comparing options one, two, and three, section A is normally what you want to look at because that's going to show you if you're paying points and what you're paying for that rate. So that's why
Hmm.
it's important to get a second opinion or a third opinion because if closing cost is the most important part to you, you're going to want to pay attention to Section A. If payment is more important to you than out-of-pocket cost, then maybe that's not the most important thing for you to look at. But
Hmm.
you need to have a loan officer break it down and show you this is what you're paying for the rate, this is what your payment is. And that way you can see how long it takes you to recoup the cost. Because if you're paying upfront for a rate, and let's just say you have in your mind that you're going to refinance in 6 months to a year, if you
Hmm.
do not recoup those costs, then technically you're throwing that money away. So when I have someone come to me for a second opinion or a third opinion, I always break that down for them and show them, okay, this is the rate that is shown on what you sent me from another lender. This is
Hmm.
how much you're paying. This is how long it'll take you to recoup the cost. Because at the end of the day, you want to do what's best for someone financially, and maybe paying that for a rate up front doesn't do them any benefit. And then maybe it does, because each person's situation is different. I
Hmm.
think it goes back to when you get a second opinion, the first thing that a loan officer should be asking you is, what's more important to you? Is it the rate and payment, or is it the out-of-pocket cost up front? And then
Hmm.
once the loan officer knows that, they can properly educate and give the best scenario for you, because not
Hmm.
everyone has the same scenario.
Hmm. What, we're almost out of time, but I wanted to ask you, like, so you have all this information, all this knowledge, and there's something that sets you different. Like, you're a mortgage broker. Explain the difference between, so people that don't understand, why would they go with a mortgage broker versus like a direct lender or someone like that? What's the benefit in it for them to do that?
So, mortgage brokers, like I said, I've been on the broker side now since 2018. And for me, being in banking and then being on the direct lending side and now being on the broker side, I've seen how all three different aspects of lending work. In my opinion, the broker side has a lot more options. For instance, I think we have 82 different banks that we can use and shop from. So we have more options for people.
Hmm.
And well, I want to touch on this real quick as well. When you were asking me earlier about what are some objections or what are some hurdles that people think they have,
Hmm.
self-employed people, I get a lot of self-employed people, and they think, oh, I write everything off on my taxes. There's no way I can buy a house. There are other programs out there for self-employed people, whether it's bank statement loans and things like that, we can explore. So, and that also ties back to being on the broker side. We have a more variety of options for people. And then also we don't have the middle people that have to be paid. So therefore our rates are lower.
Hmm.
We don't have sales managers, all the middle managers that have to
Layers.
be, yeah, the layers that have to be paid. So that's
Hmm.
one reason that brokers have lower rates as well. Um, on the banking side, no matter what bank you go with, most of the time they just have one lending option and it's their bank. So if it doesn't fit in what their bank offers, then sometimes they can't do the loans. But on the broker side, we have a lot of options as far as banks we can use. We have a lot of different programs that we can use. But I also think having that initial conversation as to what's important to the person, whether it's the rate, the payment, the out-of-pocket cost, and really going in what that means and just understanding what's important and trusting. So you have to be able to trust the people that you work with. So Dustin and myself, we're never in it just to make money. Like we
Hmm.
want to make sure that we set people up for success. So knowing that you can trust the people that you work with, um, I don't get paid any different whether you have a 4% rate or if you have an 8% rate. It doesn't, I mean, I don't benefit from it. So we always try to make sure we set people up to, to be in the right mortgage program, because there are several different programs. And sometimes people say, oh, I want this loan, but they don't understand what all goes into that. So I think just
Hmm.
having the right people on your team that are there to educate you and also aren't there just for the loan. Like we're a team, we're there after the
Hmm.
loan closes as well, because questions come up after. And I
Yeah,
think a lot of people think, oh, what happens after I buy the house? Who do I go to for questions? Well,
yeah,
you have us for life because we're always here to answer those questions and guide and help with anything we can.
totally. And I think that's that's a good place to, you know, hit the, hit the pause button on this, because that's exactly right. Like, we have the transaction. Just because we closed on a house, it doesn't mean we've disappeared from your life. Like,
No, you're stuck with us.
you're stuck with us. So, we want to be your partners throughout the whole process until you buy or sell the next house, or, or even throughout the process, and you just want to understand like where you are currently with your current situation, like whatever. So, um, anything else you want to wrap up this little conversation with, in terms of like letting people know what they don't know that they don't know, or
I just always say you have to start somewhere and you don't know what you don't know. So reach out to Dustin or myself if you have any questions. I always say there's no question too small. So even if it's just a basic question, I mean, that's what we're here for. I actually really like the education side of it and teaching people the difference between the types of loans, you
Mhm,
teaching them about how home values work, what to
mhm,
look for, like home inspections, because there are several different things that go into it. So a lot of people don't know what all happens on the real estate side, like what all inspections you have to ensure that you are getting the best home and that everything's up to
mhm.
par, or appraisals. Like there's so many different questions and there's so many different people involved in a transaction. So I think
Totally.
just having that basic education of how to get started is what a lot of people are afraid of, but
Hmm.
you have to start. So I say just start having those conversations
Yeah.
and learning more about your situation and how
I
far out you are.
I heard on a podcast yesterday that in a real estate transaction, no fewer than 17 hands touch that transaction.
I believe
From
that. Yeah.
lenders to title people to inspection people to, you know,
Appraisers,
appraisers, and yeah,
underwriters.
everybody. Yeah, so many people are involved in a transaction. And so, I think it's important for buyers, or anybody who's thinking about it, to know that whenever you know, decide to pull the trigger on buying a house, or just initiating the process, it's like you have a team of people that really are pulling for you. Especially, I mean, Jill is definitely pulling for you. We're all pulling for, and we want to make sure that it's the best situation, like you just said, for you specifically. It's not like, we're not trying to just, turn and burn. This is long-term relationships are important to us, and we want to make sure that you're comfortable and happy and satisfied, and for obviously for yourself, but like we want you to tell other people about us too, so like we
Yeah.
want to be able to, grow our businesses as well, long term and down the road. So, all right, well, Jill, thank you so much for your time.
Thanks for having me.
Yeah, how can we reach out? How can we contact you? Or is there an email or a phone number that we can
Yeah.
reach out to you, or a
So you can
website?
call me or text me anytime. My number is 916-540-0564. You can reach out to Dustin as well. He has my contact information, and then he can give you my email address as well, but it is jillhomeloans@outlook.com. But we're here to help in any way that we can and answer any questions that you may have.
Perfect. Thank you so much, Jill. We will
Thank you.
hopefully see you down the road. And for all of you listening and watching, thank you for joining me and us. And hopefully we see you around the corner. Thanks, you guys.